So, the Chancellor has just completed the budget for 2025 and has introduced a whole raft of measures which are expected to increase the tax take by a further 26 billion by April 2029. In terms of the key changes from a personal tax perspective, we're seeing the income tax and national insurance thresholds frozen for a further 3 years until April 2032 before we'll see any movement there. That's increasing the tax take through fiscal drag. Additionally, we've seen a further 2% in income taxes applying to income from property, from savings, and from dividends. And finally, salary sacrifice on pensions will be restricted from April 2029 onwards, meaning that any pension contribution above £2,000 each year will be subject to national insurance. Now, there are some tax changes in other areas as well as personal taxes. Capital gains tax has seen a big change. So historically, the sales of qualifying businesses into an employee ownership structure called an employee ownership trust were fully relieved from capital gains tax. Now that relief is being halved to 50%. It is still a favourable tax relief for clients that are in the correct circumstances, but nonetheless less favourable than previously was the case. And in terms of inheritance tax, we've also seen a positive change here, actually, where the lifetime allowance for agricultural property relief and business property relief will now be transferable between spouses, which is a positive move. And finally, we have seen some fairly big changes in the context of tax reliefs that are available for startup and scale-up businesses. Some favourable tax schemes such as Enterprise Management Incentive Scheme. That's a way to provide staff with shares tax efficiently. The ability to benefit from that relief has been extended, so now larger companies will also be able to take advantage of that route, and also some further extension to VCT and EIS reliefs for investors. So some positive news. Overall, a bit of a mixed bag. The personal tax changes, of course, are fairly significant and a big part of why tax receipts are expected to increase so much. But for owner-managed businesses, there are at least some positive moves in the right direction.